Well, Mark Zuckerberg may have founded one of the giants of the virtual world, but the Facebook founder now finds himself under pressure from politicians in the real one. He's been called to give evidence over whether his customers' information was provided to a controversial company without their consent, which helped form political campaigning. The chief executive of that company, Cambridge Analytica, has been suspended.
Alexander Nix remains defiant, despite his company being at the centre of an international data security scandal. Right now, a warrant is being sought by the Information Commissioner's Office to search here, the headquarters of Cambridge Analytica. Facebook too is facing increasing pressure to answer questions about its involvement. In a letter addressed directly to Mark Zuckerberg, Damian Collins, the chair of the Commons Inquiry, asked the CEO to face a parliamentary panel. He also accuses a social network of misleading the committee at a previous hearing. All of this comes after Christopher Wiley, a former Cambridge Analytica worker, blew the whistle. He claims that the data his former employer purchased was obtained using a Facebook app created by a University of Cambridge lecturer. The Facebook application at the centre of this case is called This Is Your Digital Life. It's been taken off the internet as far as we can tell. But here's another one, again from the University of Cambridge, which came out in 2015, again using a similar Facebook process to access data about your personality. If we click on Predict My Profile here, it gives you the option to connect through Facebook. This is the application side of the story. Now look at this. If we agree to these conditions, researchers will have access to my profile name, my age range, my gender, my date of birth, anything that I've posted on Facebook they can see. With the original application, what I didn't realise perhaps was, if I agree to these conditions, researchers will also have access to my friends' data as well. Using this method, it's alleged that permissions were only needed from around 270,000 participants in order to access data from 50 million people. It's also alleged that this information was used by Cambridge Analytica for psychological profiling, a job they were hired to do by those at the very top of Donald Trump's presidential campaign in 2016. But in a string of tweets today, the company said it did not use the data to plan the presidential campaign, it did not conduct personality profiles at all, and it did delete all the data as soon as it was clear that it was accessed against Facebook's rules. Which begs the question, what did the firm do after being paid more than £10 million by the Trump campaign? Joe Tidy, Sky News.
Off the name, yeah?
Well, for more analysis on that story and some of the broader implications, of course, Head of Research at Morphic Asset Management, James Tayler, joining me live in the studio now. So welcome to the program. It certainly seems as if regulation is just knocking on the door of these social media platforms, Facebook in particular. So the FANGs have been in large part responsible for this big upswing we've seen in U.S. equities in particular. I mean, how risky is this when it comes to further gains for U.S. equities in particular?
Given their weighting in indices, it's clearly a risk for passive investors and people whose returns are tied to the indices, where these guys clearly have some large influence. I think this sensitivity is perhaps overdone in the case of Facebook. The global data privacy regulations that I think are being driven more out of Europe than anywhere else at the moment are the issue here. And the reality is any consumer company, any company nowadays storing data on and information about individuals has a higher cost has to incur a higher cost in protecting that data. But these guys, Facebook, are big enough. They know about this issue. They surely have the resources to deal with it. And from a share price perspective, the question is this really going to stop the billions of Facebook users using Facebook?
Well, you know, question as to whether Facebook is losing its appeal amongst some of those billion users is a story for another day. Right now, though, you say that the corporation is cashed up enough that it can handle compliance costs, but what about fees or fines imposed by governments? What about shareholder class action? Because we have seen one lodged in San Francisco today. I mean, is that, in especially the United States, that is much more of a litigious society, is that where you could see some real damage done to the bottom line?
Absolutely. As you said, the US is very litigious. In other parts of the world, I would expect maybe more of a response from governments through legislation or even fining. We've seen the Europeans lodge fines against some of these large US tech companies. Is that justifiable? you know, in the age where we seem to be entering sort of trade wars, then perhaps this is another potential response. Again, maybe not linked to the companies specifically in their behaviour, but more of a political decision.
Do you think that we'll see governments moving, US government in particular, to potentially break up these companies? Because you've got Facebook, it's also WhatsApp, you know, it's been on an acquisition, you know, march to really quash any competition coming through from some of these other applications. I mean, is that likely?
I don't have a strong opinion on that. It would seem unlikely to me, given, in a US context at least, given the predominance of free market thinking. I accept the political views might be changing on that, but I don't have a strong view.
Okay, so obviously we've got reputational risk as well to keep in mind when it comes to the likes of Facebook. So people start to feel that they, you know, their personal privacy and in fact their psychology is being compromised. But again, this is sort of in the broader framework, I suppose, of a conversation about regulatory risk. And one thing that sort of comes to mind is sugary drinks. So, you know, we've got a big push on to tax sugar. How, I mean, are the sugar companies the next sort of tobacco companies?
Certainly the sugar companies. I think probably consumers are going to be more sensitive to the sugary drinks companies. Certainly in the UK, I think the UK is the first jurisdiction to actually impose a sugar tax, certainly that I'm aware of. And this amounts to, in the context of Coca-Cola, for instance, 20% on a litre of Coke. And that's certainly a, call it a social or a governance risk that investors should really be aware of. Any of your viewers familiar with Morphic will know that, you know, we identify and try and integrate consideration of social governance risks along with environmental in our process. And this is exactly the kind of thing that we're looking at when it comes to considering whether Coca-Cola Amatil here in Australia is a good investment or not. Here's a company that at face value looks reasonably cheap, 15 times next year's earnings. It's got a high dividend yield, 7%. What's not to love from an investor's perspective with that? Well, I'd say there's three things not to love. One is certainly the risk of a tax on carbonated drinks down here. Just from a social perspective, the social costs, be it higher healthcare insurance premiums, be it the cost to the medical system generally in dealing with obesity and all the other, I think, unquestionable health costs of sugary drinks, that has to be a risk to the company.
Yeah, interesting, because, you know, to play devil's advocate slightly, you've got Coca-Cola Amatil saying that, you know, it tries to promote responsibility in consuming of their products. It's also got coffee, it's got water, it's moving into other areas to, I guess, offset some of the impact from those sugary drinks. However, you know, if that's your investment philosophy, you know, fair game. So is Coca-Cola Amatil here in Australia uninvestable to you? And to bring it back to Facebook, if you're concerned in any meaningful way about the way that it treats users' data, and some of the other concerns about these FANG stocks. I mean, we had shareholder groups writing to Apple recently and saying they've got to take seriously the addictive qualities of their product on particularly young brains. I mean, so does that mean that there's this whole area that's becoming uninvestable to you guys?
Well, this particular company is uninvestable to us because we're not allowed to invest in companies that have anything to do with alcohol. And one of the ways they're trying to offset the risk connected to the sugary drinks is using their distribution network to distribute alcohol in Papua New Guinea and various other places. So for us, we can't. That aside, this is where we take a very long, hard look at these risks. And you can see it. The consumers recognise the risks, so they're buying less of the stuff. The company is making the right noises. I'm sure they must be receiving a lot of incoming communications privately from investors like us. And they have to be, in order to be responsible, they have to bring that into their strategy. I wouldn't expect them to say anything you know, too far off of their normal message.
Yeah, well, it's an interesting one, and you know the boardrooms, you know, right around the world, I think, are on alert when it comes to digital assets and how they treat them, and obviously cybersecurity and all that comes along with that. So, James, always appreciate your time. Thank you very much. James Tayler there, joining us from Morphic.